Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind a couple things. Obviously no one trade is guaranteed to profit, so you want to make sure you manage the risk side of things in a way that makes sense for you. And also as we go over different ideas and concepts, keep in mind that what we're covering is not meant to be financial advisement, but is coming from an educational perspective. With that in mind, as we get going on the session within the WebTrader platform, and if you've used our app, you will see that the risk management side of things is made quite a bit easier with the way our WebTrader order window and the order window in our app are put together. As you set up your trade sizes and your stop loss and the various settings within your trade, you'll see that it calculates for you your risk, how much you're risking based on your trade size and the distance to your stop loss. Also your potential profit and other parameters are displayed for you within the order window. And that's obviously before you ever even place the trade. And so the risk management side of things is made quite a bit easier as you trade with AvaTrade within our own platform and app. So we'll maybe demonstrate some of those functionalities as we go through a trade simulation or two as we come up with some ideas within the session. Now to log into our WebTrader platform from our main website, you just click the login in the upper right hand corner, and that allows you to trade on both MT4 and MT5 accounts from the same location. So regardless of which platform you prefer to trade on, in terms of MetaTrader, you can do both of them from one location within our app and our WebTrader. Now, as we look at the charts, before we jump into the technical analysis, which is really our focus today, we should pay attention to what's happening fundamentally in a general sense anyways, to get an idea of basically which way is the sentiment, maybe pushing things with different instruments before you go in for more exact entry points and exit points with your technical analysis. And basically today there's been some in general weak data out of the European Union and out of the US. Things are kind of flat, waiting for some bigger news that's coming out a bit later today. We've got NVIDIA reporting their quarterly earnings, and there's a lot of anticipation as to whether they've done as good as expected or not this time around. The general expectation over the past couple of years really is they not only exceed the expected earnings and revenue data, but they exceed it by a lot. And so it's almost set up for a disappointment if they haven't done that, even if they reach the targeted numbers. But we'll see how that pans out. Their numbers are reported at the close of the US session, which is 4 p.m. in general is the close, New York time, 4 p.m., the close of the US session. So it'll be sometime after that. And we'll see. Usually it's pretty quick after the US session closes that those numbers come out when a company is reporting after market close US time. So probably by 4:30, 5 o'clock at the latest, we'll see those numbers coming out New York time. And you know, there's a lot of anticipation as to what that might do with the momentum, and particularly in the tech sector, we may see some big movements. So that's something to keep an eye on as we move into the next few hours, really, moving forward and into tomorrow. Now, some other things to think about would be the FOMC meeting minutes are coming out as well. And that's not too long from now. In a couple hours time, we'll see the FOMC meeting minutes released. And basically what that is, the FOMC committee is responsible for helping to determine monetary policy in the US. And there's a lot of anticipation as to what those minutes will show from their last meeting, perhaps alluding to the fact of, will the US be cutting interest rates anytime soon or not? They've really held the rates steady for quite some time now, and the things have slowed down quite a bit in terms of inflation. The economy in the U.S. is relatively stable, and there are those that think that maybe now's the time to start cutting interest rates further, and the markets are kind of in wait and see mode, it seems, and we'll look at that on the charts. When we do our technical review of the charts, you'll see that maybe there's not a lot of momentum one way or another because of the anticipation of waiting both for the NVIDIA earnings results and also what will these minutes show about potential monetary policy in the U.S. moving forward. So we're going to take a look at a few charts and see how are the movements going now. Maybe what's the current signal from Trading Central, the technical signals that come out, and then anticipate what might happen as that bigger news comes with NVIDIA and the FOMC minutes, maybe even looming larger than the NVIDIA results, and work out a strategy that might make sense with particular instruments, maybe those that are connected more to the US because of the announcements that are coming. There's a suggestion here, Joseph, you're asking that you'd like to take a look at the USD JPY. It makes sense to me with the NVIDIA results and the US FOMC minutes. USD JPY makes sense to look at as it's a US-based currency pairing. So let's go ahead and pull up the USD JPY, and let's see if, first of all, if we look at the signal, the anticipation here is USD will be strengthening a bit more up to the 145.78 on up to 146 plus range. So we're talking another good number of pips before we get to that take profit zone. And so this signal is showing that it's broken through this resistance here on the daily candle chart, and looks like this could climb quite a bit further up towards 146 or so in terms of the technical setup within this signal. Now, if we want to go ahead and buy or sell, we can see we can set up in the order window here. And as you start to enter your take profit and stop loss, you can see it's calculating your potential profit, potential loss based on your lot size and where you're putting your stop loss and take profit. And that adjusts immediately as you adjust the trade sizes to the appropriate potential profit and loss. Now, let's go ahead and load the USD JPY chart. And we'll get rid of the order window for the time being and do our own technical analysis here. So the short-term signal is saying buy. Why would that be? Well, the U.S. economy's been somewhat strong. The tariff situation has been starting to work itself out quite a bit, first with the UK, some talk about equal agreements on both sides with the U.S. and China to pull the tariffs down a bit. And some other countries anticipated to be having deals soon with the U.S. to get rid of those increased tariffs, or at least a large part of them. And so that's got the USD maybe being somewhat strong. I anticipate a lot of movement on this currency pairing, both with the NVIDIA results coming in and maybe even more so with the FOMC minutes release, as we get maybe a better understanding as to US monetary policy in the coming weeks and months regarding interest rates. And so let's jump off the 30-minute candles. We'll go to something larger. And as we look at, we've got the wrong chart showing here. Let's try and get it to load the appropriate chart for us. There we are. So let's take a look then at the USD JPY chart and see how it's trending in an immediate sense and also with the larger candles. So apologies, looks like we're having a little bit of a technical issue with the charting system. Yeah, my charts are not refreshing, unfortunately. Let's see if we switch instruments, if we can fix the freeze on the charts. Hopefully you're not experiencing any issues on your side, but currently my charts don't want to adjust. Let me refresh the screen. Okay, looks like we're back up and running properly here in the charts. So we see an uptrend on the smaller candles, which fits the current signal coming from Trading Central and the take profit zone. These are lines that I drew from last week on the USD JPY chart. And what we see is right in the area where Trading Central's recommending a take profit now on their buy signal. That's the same spot where I drew resistance levels from last week. And you see on the 2-hour candles that this was an important price level going back a ways into the past days. And we see support and resistance at this price. And as we get up near this 146 plus resistance level, that's where the current signal says to take profit on the short-term move. So it looks like it's trying to get up there. It looks like a pretty solid signal from a technical perspective. And let me just get rid of some of these lines. We don't need all of them. And so this resistance level here would be the top of the take profit zone from the Trading Central signal. If we want to go to larger candles and expand this chart a bit, we can look from a larger perspective. If indeed trade deals start to be had more and more, and we start to get to a point where fear about that situation is lower and lower, the yen being a safe haven currency tends to strengthen when there's fear, and it strengthened quite a bit when this whole trade war fear really kicked off, when Trump announced all of those large tariffs on various countries. And so it stands to make sense that if trade deals now start to kill that fear, that the yen could give back some ground to the US dollar, with the US dollar perhaps strengthening with these trade deals coming in place, and the yen weakening as fear drops. Now, obviously, there's no guarantee of that, but the technicals show that indeed the yen had pulled the USD down during those fears, and as the fears are subsiding, we see the USD going back up already against the yen. So as we look at this chart, we see the next resistance level past the short-term signal from Trading Central, which was around 146. We see the next resistance on the 1-day candles up around 148.50. And so we can see this here in the 1-day candles. The last couple times the price reached around 148.50. We see it push back down once here. The last time being a couple weeks back, we hit that same price level and it pushed back down again. This is a pretty good bounce the last couple days off of the 142.5 range down here, which was a support level as well. And it looks like a pretty strong uptrend to match that Trading Central signal. What will happen between now and the end of this week with this movement largely could depend upon what do those FOMC minutes show this evening, and also NVIDIA playing maybe a significant but not as large of a role in the shorter term move with what do their numbers look like later today. So that, looking at the bigger picture combined with the smaller shorter term signal, it looks like a pretty bullish movement right now in USD JPY. So Joseph, I know you were the one that requested this pairing. That's the current technical momentum is upward. Fundamentally, maybe it's neutral to maybe being in your favor as well with upward movement here. But just keep in mind that as quick as those headlines can come out, the yen could strengthen back up with any fear that could hit the market. So it would only take a headline about U.S. China tariff negotiations break off, if something like that happens to bring fear about tariffs again, you could see the yen strengthen right back up, pulling this movement downward. So while you go with the technical trend perhaps on this, which is upward, you want to protect yourself on the downside in case the fundamental side of things changes, which could then break this technical uptrend. But the trend is certainly showing upward momentum, currently matching that signal from Trading Central. So if we want to set up a trade here, and let's say you're bullish, which makes sense with the current trend and the current fundamental news situation, at least being neutral with that move, if not also favoring that direction. I'd be looking on the longer move. If you do the shorter move with Trading Central, which is around the 146 take profit, if you wanted to diversify with a longer move, we're looking at around 148.50 in the price like we're showing on the chart. So let's assume maybe you did the shorter term move from the signal, and now we're looking at potential longer term move to diversify the upward trend in terms of how you're attacking, trying to go after profits with this movement. So rather than putting everything in the short-term move, maybe you have a long-term strategy as well. And so on these one-day candles, I'm looking up below 148.50 then for a potential take profit, so that you don't have to break that resistance level to hit your take profit. So I've drawn a line just below that resistance at 148.22 or so. All right, so if I was buying on that and I want to know, well, how much will I make and how much am I risking now with this technical move? Take profit at 148.22. Again, doesn't have to be exactly in that spot, but that's where I've drawn this line. So we'll put 148.22. Potential profit, almost $34,000 with the current trade size. Let's move this down to a more reasonable trade size for most traders. One lot, I'm looking at 22.56 potential profit. What's my risk? Depends where I put my stop loss now. If I want to assume that this trend is going to move upward over the next few days, and that if it reverses, I want to get out, then my stop loss only has to be below maybe this support level here. Okay, these are one-day candles. They hit and went up, hit and went up. When it got below that level, it continued to drop. So this price seems to be a decision point, that if it stays above this price, it climbs. If it goes below this price, it drops. Okay, and then it ranged between there for quite a while, this being a resistance level here, resistance, resistance. Then once it got above, it was support. When it's below, it's hitting and dropping from that price. So this seems to be an important price level from the past movements in terms of old resistance. And so if this was going to reverse and go the wrong way, if it breaks back below this price, the history shows that then it will likely drop further from the technical picture. And so my stop loss, I may put just below 142 or 144.27, because if it drops below there, the history shows me that it might continue to drop quite a bit further. So 144, let's say 20, gets my stop loss in a spot that it would have to break into a downtrend in order for me to give up on this trade. So now I'm looking at risking about 516 to make over 2200, 2256. And so from a potential loss perspective, I'm below 1% of my balance. Okay, this account that I'm using for demonstrating these trading strategies has a balance of around 54,000, and so 540 or so would be 1%. So I'm below 1%, and maybe you're comfortable risking 2% per trade or 0.5%. It's up to you how much you want to risk per trade, but the point is, this system is allowing you to know before you place the trade, how much is my possible loss to my stop loss? Okay, what's my potential profit? And now as I start to look at this, I realize, okay, I could do a couple different things here. I could have my stop loss further away if I want to be more patient with my stop loss, or I could do a larger trade if I wanted a larger potential profit and get my stop loss a little closer. So there are options depending on your style of trading. If I wanted to have my stop loss down below a couple more support levels, like at this price level down here, then it would be more of a 1-to-1 ratio for potential risk to potential profit. And that's okay as well, depending on how patient you want to be with your stop loss. The way I'm looking at it right now, I've got my stop loss somewhat close because I know there's some news coming that will either support this uptrend right now in the USD/JPY or not. And so if it continues with the momentum in the direction that it is, could be off and running to a nice potential profit. If the news goes the wrong way, and especially with the FOMC minutes, it could be quite a reversal. And so getting out early might make sense if that news completely changes this trend. And so with this type of setup, if you're right even 1 out of 4 times, you're breaking even. And if you're better than 25% accuracy, you're making a nice profit. If you can even be 50-50 with this kind of move, that would be a nice return for any trader, really. So with this setup, I've got a measured risk. I've got a nice potential profit, over 2% of my balance potential profit, even pushing towards 3-4%, and risking only 1% or so, even less than that on the account. And so once I've got everything worked out with my risk management and my technicals, then I'm ready to make my move. And it's largely based on technicals, but also backed by fundamentals with this type of trade. Let's see, I see another question popping up. Let me just take a look real quick. Okay. Yeah, you can do a lot of your trading on the demo if you want to practice some of what we're doing here. The minimum deposits on the account, for now, I don't think there's any plans to lower them. And one thing to consider is maybe waiting until you have a balance that you can work with, an amount that you can invest that allows you to have a balance that gives you better flexibility. Sometimes, I can understand that some traders want to trade with a certain amount in their account, but you also have to consider, your ability to potentially re-enter from different trade points, your ability to trade on more than maybe one instrument at a time, to diversify things, to take advantage of different storylines and different chart setups that you might find. And so a certain minimum amount in your balance typically is recommended. And that's why most brokers, including AvaTrade, have a minimum amount that you need to invest in order to get an account going live. So that's something to keep in mind. But you can also play around on the demo if you don't have the numbers to put into the live account that maybe you're most comfortable trading with until you get to the point that you can. Very good question. Now, we can take a look at some other instruments. Maybe we could move into the equities, and it would make sense, maybe the US 500 or the NASDAQ, to take a look, because NVIDIA tends to move those indices a bit more than some of the others, and especially the US Tech 100, because it's so tech heavy. And so if we look at something like the US 100, and keep in mind that we've got NVIDIA reporting and the FOMC minutes coming up, we can start to anticipate potential moves as we look at the technical setup that's on the chart. And so on the one-day candles, we can see we've reached a resistance level, and it's pretty clear that the market is kind of in a wait and see for what's going to happen this evening with the economic information and data that's coming out. And you see on the one-day candles how many attempts we've had to break this price level just in the past couple weeks. 1, 2, 3, 4, 5 one-day candles at this price level trying to break through, and all of them failing and dropping back down. And now currently today, we hit that price level on the current one-day candle and just sitting below it, waiting to see if it will break through. So I anticipate potentially one of two things happening through the evening tonight and into tomorrow. The NVIDIA results and the FOMC minutes are either going to create enough momentum to potentially break through this resistance level and climb further, or we could see a strong reversal off this resistance dropping back down. Okay, and we don't know for sure what will the NVIDIA results be. We don't know for sure what the FOMC minutes will show. And so you've got a couple options. You can set up preemptive pending orders beyond existing resistance and support levels, waiting for a breakthrough with the big news to trigger a buy or a sell at a spot that you think confirms a movement in that direction. Or you can wait until the information comes out and then make your decision to make the trade after a potential breakthrough already occurs, okay, from a manual type trade. And so those are both methods that absolutely can work, and you're not bound by just one or the other. You could employ both of those strategies. Since the news is not out yet, we'll set up the pending order idea, and then you can also make some decisions after the data comes out later today as you move into tomorrow. So the one-day candle resistance we see is clear here. Now, if we then go into smaller candles, we can take a look and see what's the current trending doing. And so here's that line I drew on the one-day candles. This is the resistance. It's clearly at this level and having trouble breaking through. But what we don't see is when it pulled off of that resistance, we don't see that it just kept dropping. Okay, the US Tech 100 here is holding at in fact, the first support level that it reached down here, it bounced off of on the 1 hour candles. So 1 hour finds resistance at the one-day candle, it comes back to the 1 hour candle support here and bounces back up, kind of ranging between these two prices, waiting for a potential strong enough news to break one way or the other. So what I'd be looking at is a pending order up here that if we break through the one-day candle resistance, which it hasn't been able to do for really weeks, then maybe that triggers you to think that there was strong enough positive news that this will keep climbing. So the downward move, I think, would take average news or less. The upward breakthrough would take maybe strong news and might have a larger potential momentum in order to get through this resistance, okay? Because it's been a long time since it's broken above here, but it's been trending below there for the past days and weeks with no trouble. So if it stays below, it's not necessarily big news, but if it breaks above, maybe we can assume there was bigger news. So it feels like the upside is more determinant on the upcoming news, and the downside, well, it's been down there anyways for the past weeks. So with that idea, we're looking at the buy side as requiring big news in order to be triggered, the downside not. So if we do a pending order above the resistance up in this zone, that will only trigger if it breaks that resistance level that's been some time since it's been able to get through that price level. And then we wait on the big news to see if it can bring that to fruition from the fundamental side of things. But this is a great technical resistance level to wait to see if there's enough momentum to create that uptrend to enter on a buy position. And this is basically a breakout strategy, waiting for the move to confirm the directionality that you think it might go. So execute when price hits allows us to put the price that we'd like to enter if it goes there. So around 21,609 is where I drew that line. Take profit if we're on one-day candles. We don't see resistance on the current chart, right? So now we need to go to let's go to one-day candles. Sorry, we were on 1 hour candles, and now we see that resistance level past the entry, which is breaking through this resistance. As we're on the one-day candles, we see the next resistance level on the one-day candles up here. Okay, this was the last spot that it hit and then pulled down from. So we're looking quite a ways up, all the way to 22,262 before we hit the next one-day candle resistance. And so we don't have to go quite that far with our take profit, but we know we have until that price, 22,262, before that resistance level is hit. And so we could do something like 22,000 even. Okay, that's about 400 points up from the entry price. So stop loss, if we go back to the smaller candles, we can say, if we're entering on a breakthrough of this resistance on a pending order, if it breaks through and enters here, if it's a true breakthrough, it shouldn't come back down. It should break through and have momentum to keep climbing. So if we enter at this price above this resistance, our stop loss back below would make sense, so that if it's a fake breakthrough, a false breakthrough, where it breaks through and comes back down, we don't risk much. We can get out with a small loss. If it's a true breakthrough and continues to climb with momentum, then we have huge profit potential. So stop loss somewhere back below the entry price, below this resistance level, which should act as support if the news is big enough to create upward momentum, should act as support to not allow our stop loss to get hit. And if it does, it's a small risk back down here. So we'd be looking at stop loss to get below these one-day candle resistance points around 21,000, let's say 500. And that's a pretty patient stop loss as well. We get below all of that resistance level. So we're looking at not quite 4-to-1 ratio, but better than 3-to-1 potential profit to risk. And now the technicals have set up those exit points for take profit up this way, stop loss back down below this resistance, and entry point only if it breaks through the resistance. And so now we just need to adjust our trade size to have the proper risk management for this technical setup. So if I go to lot size 0.1, I'm looking at 1,000 risk to make almost 4,000. Okay, not quite 4-to-1 ratio, but almost. If I go 0.5 with my lot size, now I'm looking at about 1% risk on my account, which is what I tend to use as an example for risk management. Again, you can risk more than that or less than that on your account, but the point is you should know how much you're risking and understand it before you place your trade. So I'm going after a pretty significant profit here, risking around 1% to make near 4% on the account. And again, if I'm right, 1 out of 4 tries on something like this, I'm breaking even or better. And if I'm right even a third of the time or more, we're looking at a nice profit, nice return overall. And so you need to be patient with your strategies. You're not going to win every trade, but as you do this type of setup, as you get good at lining up the technicals with the fundamental headwinds, as we could call them, you shouldn't have any trouble being right, better than 25% of the time, I would think. Okay, so with this setup, then, if you like the potential profit, the risk, the entry points, then we're ready to go ahead and say buy. What you'll notice is this opens as an order and not a position. Why? Because it's not opened yet. Remember, this is a pending order waiting for confirmation of a breakthrough of this resistance before it will open, confirming the strong uptrend for a longer term type move. That again, we can't even see the take profit level on the 2-hour candles. We need to look at the 1-day candles to see where our take profit is on here. So it is a bit of a longer move than the shorter term signals that we see from Trading Central. And so we see our take profit then here. That's this line. Here's our take profit. Our entry is here. Okay. I think this is a good place to stop. We do have some big news coming in the next couple hours. Keep an eye on the NVIDIA results and also the FOMC minutes. I do believe you'll see a lot of energetic movements on the charts, especially USD pairings, US indices, but you will see globally movement based on this information coming out as well. So you can trade on other instruments that maybe you're more comfortable with or more familiar with this news that's coming out. If you have any questions, obviously contact your account managers. You also can attend tomorrow's session. I'll be doing a session earlier in the day, 11 a.m. UK time. It's the fundamental analysis webinar, and we'll talk about the NVIDIA results and the FOMC minutes and other economic announcements that'll be coming out this week as well on Thursday, Friday. So that session, you're welcome to join, and if you can't catch it live, all of the sessions are uploaded to our YouTube channel by the next business day. All right, everybody, thank you for joining, and good luck with your trading. Bye for now.